Okay, this video is going to address a lot of issues, and to be perfectly honest, if you find yourself dealing with these issues, you need to speak to a competent attorney well-versed in mortgage foreclosures and real estate. Many people these days are having, for any number of reasons, difficulty in making their mortgage payments. As a result of this, the federal government on March 4, 2009 started the Home Affordable Modification Program, or HAMP for short, which sets up guidelines for a lender's modification of a residential mortgage. Now, I'm not going to go into the detail as to the specifics of the program, except to say that the general guidelines calculate a modified mortgage payment that's including principal, interest, taxes, insurance, and monthly homeowner's dues to be about 31% of the household's gross monthly income. The trick to all of this is that while your lender is making the calculations as to what constitutes your new mortgage payment at 31% of your gross income, they are also making a determination as to whether, even if they were to approve a new payment of 31% of gross monthly income, whether such a modification causes the bank to lose more or less money than simply foreclosing on the property. They don't have to give you the modification if they're going to lose more money on it than foreclosing on you. What you want to remember, and I want to emphasize in this video, is that if you don't qualify for the mortgage modification, in other words, the bank will lose more money with a 31% monthly payment of your gross income, the lender must give you the option of various alternative resolutions prior to foreclosing on the property. This is the key. If the modification doesn't pan out, in other words, the lender's calculation shows they'll lose more money doing the modification, the lender must offer you the chance to do other alternative resolutions. These alternative resolutions would include a deed in lieu of foreclosure, which simply involves giving your home back to the bank, or a short sale, finding a buyer with the mortgage company's agreement to take less than what is due on the mortgage, including unpaid interest and penalties. Keep in mind, the bank does not want to foreclose on your house and will do a lot to avoid having to take the house back. The net result of this is that if you are making a legitimate effort to sell your home, the bank will probably defer the foreclosure, perhaps for many months, long after the year that it normally takes the bank to complete a foreclosure proceeding. Moreover, some banks have been providing incentives to homeowners, some of which backed by the federal government, others on the bank's own initiative, which give the homeowner an incentive of several $1,000s, and I've heard as high as $20,000 to complete the short sale. If you find yourself in this type of situation, ask around. Your community probably has attorneys and realtors that are in the know and deal with these types of issues every day. You need to locate those people and make an appointment to talk to them as soon as possible.